All right, so before anything else, I want to say rest in peace, Kyle Busch. Generational talent, passed away, 41 years old, far too young. Big loss for the NASCAR community, for motorsports, for his family. So my deepest condolences for himself or his family, everybody close to him. So I want to be upfront of why I'm making this video. The lawsuit has been public before he passed. The financial lessons here are real. They matter. And I think Kyle Busch, a guy who clearly fought for every dollar he earned, would want people to learn from this situation rather than let this get buried. Okay, so this isn't a hit piece. It's a case study. I'm going to treat this with some respect. Okay, so $8.5 million, an insurance policy, and a handshake. Okay, so Kyle Busch, NASCAR champion, has made generational money. So if you think this story has nothing to do with you, I think you're wrong, because the same mechanics that burned Kyle Busch are being pitched to regular people every single day. Okay, different numbers, the same trap. So I recently got into the life insurance space into selling life insurance because I genuinely believe in IULs and infinite banking if done right. Okay, so that's exactly why I'm talking about this, because this case exposes what happens when trust replaces documentation and relationships replace due diligence. Okay, I'm not going to sit here and pretend that this doesn't happen in the industry. It does all the time, and that's a big passion of why I got into this space. Okay, so a little background. Busch was driving for Joe Gibbs Racing. Part of his comp was a massive deferred payment package, a big lump sum paid out down the road. So his insurance agent, Matthew Schindler, comes in with a strategy. Take out 2 IULs with Pacific Life. Schindler fronts the premium, which is millions. Busch repays him with interest once that JGR money lands. Okay, so on paper, doesn't sound like a bad idea. Use future income to fund permanent life insurance today, build cash value, tax advantage asset. It's actually a real strategy that works if it's done correctly. Now the problem, none of this was in writing. Okay, so $8.5 million, no contract, just a handshake. So that's where a lot of this unravels. So for anybody new to this, an IUL is a permanent life insurance policy with a cash value component tied to a market index like the S&P 500. So you get a floor. So you don't lose when the market drops. You get a cap, usually somewhere around 10 to 12%. So you don't fully capture the upside either. Okay, but you get tax-free growth, tax-free loans against your cash value, and a death benefit. So for high net worth people, these policies are positioned as wealth building vehicles. They can be. Now, personally, I use a dividend paying whole life policy through my infinite banking strategy. IULs do serve a real purpose when structured correctly, but they should not be in the same category as infinite banking. Okay. So, Busch's policies were massive, obviously. So premiums running into the millions per year. Now, here's the thing that you need to sit with. Schindler was paying those premiums, not Busch, okay, the agent. So think about that for a second. So Schindler files a lawsuit saying Busch never repaid the $8.5 million in premiums. Says he personally borrowed money, liquidated assets, stretched himself thin, all on Busch's promise to pay him back. Okay. He also claims he gave Busch an additional $3.2 million in personal loans. Okay, so total exposure around $12 million. Now, Busch, his version of this story is completely different. He said that Schindler's company, Hound & Company, was both the broker on these policies and named the beneficiary, meaning Schindler stood to collect the death benefit if something happened to Busch. Okay, That's not a financial advisor. That is a conflict of interest dressed up as one. So Busch also said he already paid Schindler settlement money to close this out, and Schindler came back for more. His counterclaim alleged fraudulent misrepresentation. Okay, essentially, he lied about what these policies were to get him into this policy. So, two completely different stories. The courts would have figured out who was right. Now that chapter closes with him. Okay. Now the lessons here do not close. Okay, they apply right now, and they will continue to apply with what is being pumped out in the life insurance space. Okay. Now, lesson number one. I don't care how tight you are with somebody. I don't care how much history you have. $8.5 million on a verbal agreement is insane. So before you say that's a rich person problem, this happens at every level: 50,000, 10,000, 5,000. Family money, business partnerships, the amount doesn't matter. The principle does. Okay. Proverbs 17:18. One who has no sense shakes hands in pledge. That verse is not telling you not to trust people. It's telling you that trust and documentation are not opposites. Contract protects the relationship. The person who pushes back on putting it in writing is the exact person you need a contract with. So everything goes in writing every time. Now, lesson two, know who benefits from your policy. This is the one that should make your stomach drop when you read this case. Your agent named as a beneficiary on a policy they sold you is one of the most insane conflicts of interest I've ever seen and ever heard of. So your policy exists to create financial sovereignty for you, your family, not a retirement plan for your agent. Okay? So every time you sit across from someone selling you a financial product, you need to ask, what's your commission? Who benefits if I die? Who benefits if this performs well? Who loses if it doesn't? Obviously, it is okay if everyone can benefit. Okay? Obviously, as a life insurance agent, we're going to make money if you sell someone a policy, but you want to make sure you're working with somebody that has morals, and everybody should win. Now, that is why I want to be transparent of how I'm getting into this space. Okay, I've been using my policy personally for years, and I think it's very powerful. And I think there's a lot of misconceptions in this space. So that is my goal, is to pretty much share what I'm doing, how I use this policy, and I'm licensed to sell life insurance. So if someone wants to set up a policy for themselves in their future, I am able to assist with that. Okay. Lesson three, premium financing is leverage, not a shortcut. So the pitch for premium financing sounds great. Borrow to fund the policy. Let the cash value growth outpace the loan interest. Repay when your big liquidity event comes in. It's a strategy that can work. But if your repayment source disappears, gets delayed, cut, restructured, you're on the hook for the premiums and the interest. Okay, so if the terms are not documented clearly, you end up exactly where this situation landed in court, arguing about what's actually agreed to. Okay, so leverage amplifies gains, amplifies losses as well. So never forget that. Okay. This is not a hit piece on IULs. Okay, I believe in these products if they're structured right, sold honestly, and documented properly. This is a hit piece on bad actors, bad agents, and on the version of this industry that makes the rest of it look bad. Okay, financial sovereignty is not just owning the right products, it's how you own them. It's documentation, it's structure, it's alignment of interest, it's you understanding what you're signing before you sign it. Now, 3 questions before you ever put your name on anything. Is it in writing? Who benefits besides me? What happens if my repayment plan falls apart? Okay, if you cannot answer all these 3, I would recommend not signing it. So I do want to close this video out back where we started. I've never really been a big NASCAR guy. This came across my feed because of the life insurance. So I do want to wish my condolences to Kyle's family, everybody close to him. He was gone way too soon. He's 41 years old. It's terrible. What matters is, the lawsuit, that's besides the point. What matters is his family. Hope they're at peace. Now the lessons here they don't disappear with Kyle. They get more important actually, because this guy had generational money, and he is still, a victim of this misrepresentation of what these policies are. Okay. Now, if this can happen to somebody like him with real money and real access to advisors, it can happen to 20, 30-year-old that's just, making 80 grand a year. So again, my goal for this channel is just to simply share how I'm building my wealth, how I'm structuring my finances with my fiance, my future wife, so we can build a system to pass down to our kids and their kids. And the foundation of the system is a dividend-paying whole life insurance policy, the infinite banking strategy. There's a lot of misinformation out there. So my goal is to cut through all of that misinformation and just provide, the truth for this policy. Not crapping on IULs or anything. Powerful products, if structured right, they're not infinite banking. And there's a lot of misinformation out there. So again, follow the channel. I'm going to be posting my personal investments, not investment advice. I'm going to be posting my portfolio updates, how we're investing our money. So take care, guys.